Redfin reported that the typical home has taken nearly 2 months to sell. That's the slowest pace in 5 years. I'm going to talk about what that means this year, 2025. My name is Orlando Hubbard. I work as a real estate inside sales agent, specialist, acquisitions analyst, whatever you want to call it. I work with a company that's a nationwide, pretty much wholesale company. We buy and purchase houses, invest in houses, that sort of thing. So I've been doing this since 2018. So really off and on, just truthfully, for about 7 years now. And so I have a little bit of knowledge, a little bit of insight into the game. And yeah, I just saw this article on Redfin and I thought that I would hop in and just say what that means for people that are looking to buy houses, looking to invest in houses. This is going to be the perfect time coming in the spring. I was just talking to a colleague and we were talking about how the spring, the winter months are usually a lot slower, but spring, May, April, May, June, July, that sort of thing. March, April, May, those are typically just banger boom months. And I'm excited because I know that some great deals are going to come for investors, going to come for people who are looking to purchase home. But let's look at this article right here from Redfin. The typical home is taking nearly 2 months to sell. That's the slowest pace in 5 years. So homes are selling at the slowest pace since the start of the pandemic. Fewer homes are turning over as mortgage rates and home prices remain elevated. Mortgage rates and home prices. We all know about the mortgage rates. We all understand that the mortgage rates are going crazy right now. But let's talk about the home prices. People have inflated. We are still living in this weird world of like overinflation in terms of a home price that's only due for a correction. I don't know when. I'm not one of those alarmists to say when a housing market correction is going to happen. But I am just a huge advocate of, hey, this doesn't work. It doesn't work just because you slap a price on a house and say that's what it's worth. That is what it's worth. We had that boom of 2021, 2022 that came that people were just like going crazy on overpricing houses and also overpaying for houses that inflated the market. Not only that, we had interest rates and things like that happened. But we also had where, people couldn't get kicked out of the house or be foreclosed on, that sort of thing. So people had time, people had all of these events that the pandemic pretty much kind of catered to, created, that are eventually going to come back to bite everybody. So let's look at the article here. It says, according to Redfin data, as of 4 weeks ending January 26, the typical U.S. home listing that went under contract sat on the market for 54 days before the seller accepted an offer. The longest span since March 2020 and a week longer than this time last year. At this time in 2022, during the pandemic-driven home buying boom, the typical home was selling in 35 days. We all remember that when people were going crazy with overpricing homes. I'm here in Austin, Texas, and a lot of people were coming from California, and they were just like bidding up the houses on to another level where it's just like, this is not sustainable, guys. Like, you can't, just because they were just like, hey, these houses are much cheaper than they usually were. They were back in California. So of course I paid 30, 60, 100K over asking price. It got pretty crazy. But there were 5.2 months of supply in the market, the most since February 2019, and up from 4.9 months a year earlier. Months of supply is the length of time. This is basically what it is. Months of supply is the length of time it take for the existing supply of homes to be bought up at the market's current sales pace. So that's how long it would take for existing supply of homes to be bought up at the pace that the market is moving right now. A longer span means homes are sitting on the market and signals a buyer's market. So if if it was 4.9 months a year or a year earlier, that means that houses obviously were being bought quicker, less than 54 days like it is right now. But this year, it's expanded out a little bit longer, and now it's signaling a buyer's market. So get ready, investors. Get ready, agents who represent investors, or whoever you may be, buyers looking to buy a new house. Check this out. Pending home sales were down 9.4% year over year, the biggest decline since 2023. So people are not even going under contract and getting to the point where they're like, okay, yes, we're ready to buy. A lot of times when pending sales happen, that's pretty much meaning it's close to close. Usually if somebody doesn't close, it's because if it doesn't end up closing, it's because somebody backed out or something happened with maybe title or whatever the case may be. But those even were down. So people were not even getting to that point. They weren't getting to that point. That's the lowest it's been since 2023. That's crazy. So almost a 2-year span. Sales are slow because it's very expensive to buy a home. We all know how expensive with mortgage rates sitting near 7%. That's crazy. Home prices are up 4.8% year over year. So each year, houses are going up and up and up and up and up. Now, we do know that houses appreciate. That's the obvious point. Houses appreciate over time just because that's what type of investment it is. And that's what we expect it to do. That's why a lot of people love real estate. But inflation of housing prices is when things become a problem. Steady growth year over year is obviously that's a good thing. But when home prices continue to skyrocket too high, then we get a bubble. We get a bubble and things get a little crazy. The median monthly housing payment is $2,753, just shy of April's record high. Additionally, this is an external factor that nobody pretty much control. Extreme weather, including snow and frigid cold in the Midwest, South, and Northeast, and wildfires in Southern California. Obviously, that keeps people. Nobody wants to, move in the snow. I was talking to a colleague about that today. The other day, and she was just saying like, yeah, nobody wants to move in the snow really. So you'll get a lot of slower people slower to move and slower to want to actually to move until you get into those springtime months. The market may pick up coming weeks as mortgage rates fall at least slightly from their early January peak and new listings tick up. We will see. That's an assumption. Additionally, Redfin agents expect some buyers to step off the sidelines. And that's tired of waiting for rates and prices to come down. Now, I'm not sure about that one just because I'm like, man, honestly, if I'm a buy, if as investors, when I'm looking at deals, I'm usually just like, look, if it works, it works. And if it doesn't, it doesn't. I move on. When I'm looking at locking up a contract or something like that with the company that I work with, I'm never just like, their price is too overinflated for me. I'm just, I'm going to sit and try to wait until they get tired. I'm just like, look, I talked to a client today. I'm like, look, this is not how that works. And this is what we can offer. It was just a pretty crazy situation just because I'm like, look, you got a gutted house. Like, this is where sellers sometimes they are. This is what they are. You have a gutted house, literally nothing in there, but everything around it is selling for $50K, $60K. And this is like, this isn't in like Los Angeles or Austin or wherever. It's in like this weird place in Iowa. Nothing's selling for, over 80, 90K. And he's like, oh, it's gutted. Nothing's in there. I tore everything pretty much out. I want $35,000 for it. I'm like, wait, I'm sorry. What? What are you talking about? Like, nothing in, like, literally the house is a shell. And the after repair value at max is probably 70, 80 grand. And you want 35,000 for it. Not this investor. Sorry. But anyway, so prospective buyers have been cautious because they've seen the home sitting in the market and they've heard interest rates and prices may drop. When the market isn't competitive, some buyers think that they could just wait for costs to go down. I think that too. I'm one of those people that think that you just wait. Just wait it out. It's pretty clear that sellers aren't slashing asking prices and mortgage rates aren't plummeting. Got it. So they're saying that the mindsets are shifting, meaning like buyers are just going to be like, okay, well, we get off the sidelines just because sellers are not going to slash prices. I don't think sellers should slash prices or going to slash prices, but I do think there's going to become at some point some equilibrium of where it's like, all right, this is what you want. This is an impossible price. You're gonna run into so many hiccups that you're going to realize that this is an impossible price, and you're going to realize that you're going to have to come down at least to where we can meet somewhere in the middle. But that's just me. So let's look at some indicators here. The daily average 30-year fixed mortgage rate, that's a mouthful, 7.06%. And that's down from 7.26% 2 weeks earlier. But it's up from a year-over-year standpoint, 6.95%. That's according to Mortgage News Daily. Weekly average 30-year fixed mortgage is 6.96%, so almost 7%. It's down from 7.04%. It was up. So obviously we came down a few like a point from where it was just a week earlier, but it's not anything crazy. It's up from 6.69%. That's where we were. So it has gone up from a year-over-year standpoint. It's still going up. We know that we're seeing high interest rates, but it has come down from a week-over-week a weekly standpoint. And so people, that's one thing that I think that people are, that this article is pretty much saying when it in terms of like buyers thinking that they're gonna see lower. We think that it's gonna continue to come down, but it's like 7.04% to 6.96%. That's not a huge decrease. Like, it's better, but it's like, I remember like people talking to people that were like getting a 4% interest rate, and honestly, that was pretty great. That was back in like 2020-ish, yeah. And you have even some people who were just even better that would get like 2% interest rates. People think that they're like 4% was starting to get a little high on the high end when you were, when I would talk to people that are like, oh, I got a 4% interest rate. It's like, oh, that's not a phenomenal interest rate, because you had those times where people were getting 2% interest rates, but now we're at a 6.9% per week, weekly basis interest rate, and just to think that we're gonna go back down to 4 or even 2, that's just not gonna happen. But mortgage purchase applications essentially unchanged, down 0.4% from a week earlier, down 7% from a year-over-year standpoint. So even people looking to pick up mortgages, down 7%. Honestly, nobody wants a 6.96 interest rate, 6 or 7% interest rate. That's just not how people want to live. As far as like the home buyer demand index that they have, the lowest level since June, and it's down 1% from a year over year. So basically, it's a measure they use this to measure tours and other home buying services from Redfin agents. But let's look at touring activity. It's up 7% from the start of the year. At this time last year, it was up 8%. So it did go down like 1%. It's showing time. It's pretty much saying how many times people have toured homes. So people are looking, but they're just not finding what they want either in the price, or they're not finding what they want in like the house. They don't think that it's worth what the prices potentially are. So let's look at what Google searches for homes for sale are. Up 14% from a month earlier. Essentially, it's been unchanged. So people are still looking for houses. Again, people are just not finding what they want when they do look for houses. So we're going to look at just a couple more things. Key housing market data. The median sales price is $377,000, 4.8% year over year change. And the median asking price is $407,225. Now, it's a 5.2% year over year change. Think about that. This is the median asking price versus the median sales price. There's a discrepancy here. I know it's not a huge discrepancy, but I always just try to look at it in like a finite detail. You know what I mean? Like finite detail, just because I'm like, this is indications of how people are thinking. I'm not just looking at data when I'm looking at how are people thinking. People are asking higher prices, which is normal. They're getting lower sales price, which is, that's normal. That's normal. You ask a higher price, and then you kind of just to anchor, and then you come somewhere in the middle. But imagine this in places like California, Texas, all those places that have bigger metro areas where people are asking exponentially more than what they really should be asking for. It gets even crazier. The asking prices go through the roof with versus what the house is actually worth. So let's keep going. The median monthly mortgage payment is $2,700, 6.69% mortgage rate, year-over-year change of 8%. The pending sales 59, and like we already saw, it's down 9.4%. The new listings are at 68,000, so that's up 2.2%. And then the active listings, it's at 11.3%. That's the smallest increase in nearly a year. How many months of supply? 5.2. We already looked at that. Share of homes off market in 2 weeks, 25.7. Then the median days on market is 54. Now let's look at the median sales price in these metros, because this is going to show us what the median sales price in the areas, in these biggest areas, and the changes that they're seeing. So let's look at the metro with biggest year-over-year increase. Pittsburgh, wow. Pittsburgh is up 19.3%. Milwaukee, honestly, I think because people are moving to Milwaukee from Chicago because they're probably getting priced out of Chicago, that they're moving to those areas. Fort Lauderdale, Newark, Cincinnati. Cincinnati is a great area. If you're an investor, Cincinnati is an amazing area for investing, just because I don't know, the houses are, it's more of like a rental market, I would say. It definitely is a rental market. You can get some flips in there, but we do a lot of business in Cincinnati. I love to see Cincinnati deals come through on my desk, just because I'm like if you can get those, if you can buy them right, you can really make, you can do some damage. Let's see what the biggest metros with the biggest decreases. San Francisco with a negative 5.6%. Austin, Texas, that's where I am, negative 2.6%. Tampa, Florida, negative 1.5%. So these median sales prices are going down because we know that these houses in these areas were inflated. Like I was just saying, especially places like San Francisco, it's basically unlivable. How do people live in San Francisco? I tell people I live in Austin, Texas, and they ask me the same thing. How do you live? I talked to a gentleman today. He was like, I don't know how you guys do it. Like, I know he was in like Des Moines, Iowa, I believe. He's like, I know it's houses are getting expensive in general, but like living in places like Austin is almost unlivable. But so the decline in 3 metro areas, the pending sales have actually, they're increasing in Portland, Oregon, which is interesting to me. Milwaukee, like I was saying, because I believe people are probably getting priced out of Chicago and they're going to the closer city, which is Milwaukee. And then the declines are in Miami, Detroit, Atlanta, San Diego, Houston. Makes sense. It just honestly makes sense. Let's look at new listings. San Jose, people are actually starting to put their houses on the market in San Jose and Phoenix. Phoenix is a great market. We all know that. Seattle, Oakland, Sacramento. Now, houses that are seeing, honestly, in San Antonio, oh my God. In San Antonio, people are still thinking like shacks. I'm meaning shacks. And we're like an hour and a half away from San Antonio. Shacks, they think they can sell them for $200,000-$300,000 grand. I'm like, guys, it does not work like that. Like, it just doesn't work like that. You may fool an out of town buyer who's like in like some random place in like California and just thinking, I've heard about the cheaper houses in Texas. I'm like, but for me being a Texan, and when I see some of these houses in places like San Antonio or Austin, or the local places, for me, I'm like, guys, that doesn't make sense. Anyway, Detroit. So when I see San Antonio down, I'm like, that's not surprising. That's not surprising. New listings, just because, nobody's going to sell their house. Also, nobody's going to buy it. Detroit, Newark, Atlanta, and Warren, Michigan, which is an interesting one to me. I've never heard of Warren, actually. It seems like a smaller city. But anyway, that's what I'm seeing. That's what we're San Antonio, Detroit, Newark, Atlanta, Warren. Those are some places that are also seeing some new listings decreasing. Nobody's wanting to sell their house there. Anyway, that's all I got. I wanted to get on and actually just show that. Like, what's your thoughts? What's your thoughts with where the housing market is right now? All right, Orlando out.